In today's video, I'm going to be sharing with you the only day trading strategy that I've ever found that wins. This strategy has already made me very successful. Through countless hours of testing the markets, I've found a strategy that made me between 5 to 20% every single month. Today, I'm going to share with you how to read market direction, what a strong rejection is and how to use it, how key timing is to being consistently profitable, and of course the entries and the results of the entries as well. Also, before we begin, a massive shout out to the diamond members inside NJT. Every single diamond member this month has ended the month in green. That's incredible results, and it's because they're putting in the work with us one-to-one. If you don't know what the diamond mentorship is, make sure you visit our website. It's written all on there. So let's get started in today's video. Every trading mentor out there is going to show you the setup, but the key to making that setup successful is your multi-time frame understanding. A setup on its own is useless. A setup alongside higher time frame direction, now you have a repeatable edge. So this is what I do. I'm using 2 time frames for my direction understanding. The monthly, the weekly, and the daily is my higher time frame, and I'm looking for one pattern in current price. The reason that I'm using current price is so that I can trade this week or what the setup is presenting me right now. So where prices come from on the left or where price is reacting from on the left is going to determine the direction that I'm trading in. So I always look for this same pattern, a representation of a sideways range and an initiation to the upside, or a representation of a sideways range and an initiation to the downside. Inside the sideways range, this is where all orders are contained here. And the direction of the breakout of the range, this is what shows us the direction in the future. So if price breaks out of the range to the downside, this is now known as a sell range. So when price pulls back up here in the future, this is called a mitigation phase. And this area right here is where we're going to look for price to slow down. This is where we're going to be looking for our strong rejections. And then this is where we're going to be utilizing the timing during the sessions to execute on our trades. Again, same here. If this is our buy range, we know it's a buy range. Why? Because price broke out to the upside. When price pulls back into this buy range here, this is where we look for our strong rejections on our entry time frame, and then we're trading our continuations away from this location. Because I'm doing this on a monthly, a weekly, and a daily, these reactions that we get within price, these are going to be hundreds of pips worth of reactions. Now, if these end up being the next big move that happens within the markets, we can have directions for thousands worth of pips. So this is why I utilize one higher time frame. It doesn't matter if it's a monthly, a weekly, or a daily, whichever looks cleanest to see the sideways range, followed by the initiation and where price is reacting from right now. Ranges that have already shown me the direction before will repeat again in the future. They set up the basis for my directional trading. So now if we just go back and we see where price has reacted from, we can very clearly see this reaction. If we look left, it's from a very clear sideways market that we have here between this high point and this low point, and then price broke out here to the upside. If you can't read a sideways range, look for an aggressive move, go back, find the lowest point and the highest point before the breakout to the upside. Now that gives us our sideways range. And because we broke out to the upside, we know that this is a buy range. So when price comes back here in the future and we get our strong rejections on the lower time frame, then we can trade that direction of the market. This is how we build trade ideas within current price. Now we also need to understand where price has reacted from up here, because this is going to give us an understanding of direction to the left. So if we just go to the left and we put a ray line on and we see where price is currently reacted out from. So here we skip left all the way onto the chart. It doesn't matter how far back we go. All we want to do is look for a representation of a sideways range. Remember, this is price here. This is time. Price is what's most important because we're understanding high prices and low prices, and all we're doing is selling high and buying low. We're utilizing the time during the sessions, which we'll get to on the 15-minute, which is my entry chart, but we just want to think about high prices and low prices and sideways ranges at those high prices or low prices. Now here we can see that price is contained sideways. If we was to go up to something like a monthly and we was to look at that same price delivery here, we can see prices contained, and then this candle here is the breakout candle, the aggression and speed to the downside. If we go to the weekly, because we just want to get representations of what this looks like on multi-time frames, again, we can see sideways price action here, contained between a high and a low, and then we broke out here to the downside and started moving into a trend in price delivery. So this area here is where price is currently reacting out from. Now, because we broke out to the downside, we know that this is a sell range, which means when price gets here in the future, we are only going to be looking for strong rejections of higher prices and then taking selling opportunities here within the market. So now back onto our daily chart. So we've identified two things. First of all, where prices come from here. And second of all, where prices reacted from most recently. So that gives us our understanding of direction. We're only going to sell out of a previous sell range. Why? Because the banks have previously found an area within price, which is high enough to look for selling opportunities. And we see that because they initiated price out of that range in the past. So when price comes back up here in the future, this is the mitigation of all of those buy to sell orders that are still left open inside this sideways range. So when we see that reaction, all they're doing is either closing their positions that were left open, and we get a reaction within price, which can be hundreds, sometimes thousands of pips, or they're going to be adding to their position. Now we're going to see how the banks add to those positions when we go into our entry time frame and we focus more on the strong rejections. But right now we are set up with where price is reacting from in our buy range and where price is reacting from in our sell range. And that right there is all I'm looking for on the higher time frame. Now we can go down to the lower time frame and we can read how price is moving into these locations here. And then we can look to take trades in those overall directions. We have our direction because we've got our sell range and our buy range. Now this is where we're going to go in and start to identify strong rejections. For me, my second time frame that I use is the 15-minute chart. What a strong rejection. A strong rejection is price moving up and moving back down very aggressively. What that shows is a lot of buying and then a lot of selling. Usually creates this V formation within price as well. Now, if prices run above a previous high and we see a strong rejection, that signals to us that price doesn't want to continue any higher, and then we can trade in that opposite direction. Exactly the same if we do this on the opposite side as well. We just invert the scale. If this is a previous low, prices run below that low, and we see that V formation, the aggression and speed coming back to the upside. That shows a strong rejection of lower prices, and then we can trade in that new direction here to the upside. So this pattern right here is exactly what I look for when I get to my 15-minute chart happening inside my buy area or happening inside my selling area if we invert the chart scale as well. What this does is this signals to me that price is slowing down into an area where I anticipate price turning from. This is the only thing that I will look for. Price running above a previous high, having a strong rejection. Now I can trade any directional trades within my session utilizing my strategy. This is price action first. This is having a process on how to create high probability trading ideas that follows the same repeatable process. So now you understand what a strong rejection is. Let's go back into the areas on the charts where we anticipate the strong rejection to be happening. Let's just mark out all of the previous highs that we can see as prices coming into this area. So these are all the highs that price has created moving into this area here. So these are all times where price has started to slow down. We've run a previous high, we've had a strong rejection and moving in the opposite direction. We've run a previous high again, we've had a strong rejection moving in the opposite direction. This one here, we run a previous high, we did have a strong rejection, but then price continued. So this would not be considered as our strong rejection. This will be considered as our breakout here to the upside. Then we wait for the new high to be created, which is here. We run above this high, we have that strong rejection. These are all signs here that price is slowing down. And like I said, because this is happening in our higher time frame sell range, this is showing us that price wants to change its direction. So any of these highs that are being run with strong rejections can signal the next big move happening within the market. Then we know that price has changed its direction, and now we're looking for our continuation trades. So this is always what I look for first coming into a sell range. So before we move on, let's just recap. So we've got a sideways range that has initiated to the downside. So we know that this is a sell range. Price has pulled back up into the sell range here. Now we're zooming into our 15-minute chart, and what are we looking for? We're looking for price to run above a high and have a strong rejection of higher prices into this sell area. This shows us that price is slowing down, where we anticipate price to react out from in our monthly, weekly, or daily range. This is part one of the process. This is part two of the process. Now we go into part three. Part three is all about timing. There are three main sessions. We have Asia session, which you can see is that turquoise blue box. We have London session and we have New York session. New York will be our focus. Why? because this session is normally where the move for the day will happen, where price will move between 40 to 60 pips on a consistent basis. This is really important information for our take profit of our system too, but more on that later. So now what I'm going to do is I'm going to look for my session and I'm going to look for setups that align with my session. So we have our system in play, price has slowed down here, and we've got our strong rejection. Now what I'm looking for is a fractal high. If you guys don't know what a fractal high is, it is a high and a higher high within price. It is this price delivery right here. Also, you could see this as a trending market where we get those low to highs, higher low, and higher high. If you can identify a trend, it means that you can identify a fractal setup within the market. Now, what is actually happening in a fractal setup is price is running above a previous high and we have a strong rejection, and this can set up the next move here within the market. Again, same here. If you see this leg down as the sell to buy here, what we're doing is we're identifying this in current price. Now, the reason we're doing this in current price is this is a sell order from a bank coming in at current price. This is a buy order from a bank coming in at current price. Now, for us to get involved in this trade, instead of just looking for a trending market, we want to see some kind of candlestick confirmation to tell us that price wants to move in that direction. Again, same here, candlestick confirmation after we've seen our fractal high setup. Fractal highs are also turning points within the market. So when we're seeing these at our higher time frame sell range, specifically this one here, after we've seen a slowdown in price, and we know that during our session, our trading window during New York, we're likely to see a 40 to 60 pip move. All of these are adding together to build confluences for us to take a trade in that overall direction. So this is what we're going to be identifying on the charts. We're going to be identifying our fractal high in current price. This can happen before the session or it can happen during the session. So now we need to understand how to read current price. Current price is looking at all the previous candles, highs and lows moving into the session. So here we have a low and price has seen a move up. We created this high, we pulled back, we run above this high here, creating our fractal high within the market. And now we're seeing a move in the opposite direction. This is a sell order coming into price at current price. So then all I do in my session when the session opens is I just click sell because I have everything in my favor. We're in our higher time frame sell range. We have our run above the high and a strong rejection of higher prices, showing prices slowed down where we anticipate price to turn from. And we have our sell order coming in at current price, which shows the banks are selling at current price as well. This is how we ride the waves of the big players. Now I use a 10 pip stop loss so that my execution, I don't have to think in the moment. Everything is already predefined and I utilize 1 to 4 risk rewards. That is so that when price does slow down, like we see here, and I get taken out of my sell trades, or here again, I'm only losing 1% every single time I get taken out of these trades and I'm wrong. Again, same here. This one was a break even, but again, same process. Take a loss, take a loss, take a break even, keep the same exact process. And then here, same process again, this one wins. This is probabilities working out in your favor, utilizing the same repeatable process. Now, it's really important that you maintain consistency in the way that you execute your trades. Keep the same stop loss, keep exactly the same setups, and allow the risk rewards to work in your favor. Now, once we have direction within price, all we're doing is looking to sell at the start of every single session and allowing the probabilities to just work out for us. Some sessions we can see are going to be not so good sessions and we'll get taken out of some of our trades. But this is where we create a mechanical system and a mechanical setup to overall just trade the market direction. What I've shown you is my process to read the market direction. It's not going to work every single time, but when it does work, this is where we get involved in a high risk to reward setup that overall play out in our favor over time. We can see all of these created a fractal setup during our session. Some of them won, some of them didn't, some of them went break even. Let's calculate what we would have got involved in and the percentage that we would have made if we was to just stick with exactly the same system of trading the direction over time. So we see 1, 2 trades that would have lost utilizing the same process. This trade would have gone break even. Then we had a 4%, so we'd be up 2%. Minus 1 puts us at 1%, plus 4 is 5%, minus 1 is 4%, minus 1 is 3%, plus 4 up 7%, break even, and then another 4 again, which puts us at plus 11%. This is what actual trading will look like. I know a lot of traders out there on Instagram will show you all wins every single day, but if you're utilizing a one-to-one risk to reward, of course you're going to win a lot more trades. If I put bigger stops on all of these trades and just put it above this high every time, I would have a very high win rate, but that doesn't mean I'm going to get the most percentage out of the market. So this is the best way for me to utilize a repeatable process to get percentages out of the market and to get involved in big percentages within the market as well. So this is my process that I always use. Again, I will just continue to sell price until we get into an area here where we see price slow down, and then I can utilize my same process. So what does that mean? Price running below a previous low, as I said, and having a strong rejection of lower prices. So in the moment, price run below this low, we had the strong rejection, and this entry would have come just outside of the session, but you can see the process working out again and again. Same here, run below a previous low, strong rejection of lower prices, and then we can play continuations in that direction. This is all happening from our previous buy range that we marked out on the monthly, weekly, or daily. We utilize our slowdown within price, running below a low here and having a strong rejection, and then we can play that new direction here within price and look for any continuations that happen during our trading window. This is the process that I use every single week, every single month to build all my trade ideas, and my high risk to rewards is what allows me to make profit over time. And this process allows me to just trade what I understand, trade what I can see. It just allows me to identify what price is showing me, identify concepts, price action concepts on the charts, and then trade alongside the big moves that happen within the market on a daily basis. And what I'm doing with having the same repeatable and consistent entry rules and executing them in the same way over and over again, my subconscious mind has learnt to do this, and I've run on autopilot. That right there is the key to removing all of your emotional errors within your trading so that you can trade your system perfectly. Thank you very much for watching. If you want to find out how to get into exactly the same entries as me and Chuck's in our live sessions, make sure you visit our website, notjustatrade.com. It's down in the description of this video. You can also download a free PDF in the description as well. Make sure you leave us a like and comment, and we'll catch you guys on the next video.